This is Mark to Market, a podcast of BT correspondents.
Hello, everybody. Welcome to Mark to Market, a BT correspondence podcast that aims to provide analysis and insight on market trends and corporate issues in Singapore. My name is benpaul, and I'm a senior correspondent at the Business Times. Every week, my colleagues and I delve into a business story that matters. We're in the month of October 2024, and hardly a day goes by now without the national effort to revitalize the Singapore market hitting the headlines. The Monetary Authority of Singapore announced on the 2nd of August that it will set up a review group to recommend measures to strengthen the local equities market. Since then, various people who are part of the MAS review group, and many who are not, have offered their views on what ought to be done in order to draw promising companies to the Singapore market and spur investor interest in these companies. Now, I'll talk about some of those ideas and whether they are likely to succeed later in this podcast. Let me first provide some background on how the MAS review group came about, because I found the whole thing rather surprising myself. The underperformance of the local market and the shrinking number of listed companies in Singapore were well-known problems for years. In fact, these problems have been recurring themes in the Mark to Market column and podcast series. Questions about how to turn things around were even raised in Parliament last year. Now, MAS and the government have tried to address this issue from time to time in various ways. For example, grants were provided to defray the cost of seeking a listing on the Singapore Exchange and to help develop local equities research talent. The Anchor Fund at 65 and the Growth IPO Fund was set up in 2021 to shepherd promising companies towards listing in the Singapore market. Special Purpose Acquisition Companies, or SPACs, were also allowed to list on SGX. This was to provide companies with an alternative route to a public listing that is said to offer greater certainty of price and execution than an IPO. On top of that, various measures to protect the interests of minority investors in take-private deals and to promote board renewal have been implemented. But the effort to revitalize the market seemed to move onto a higher plane earlier this year. About 3 months before MAS unveiled its equities market review group, the Financial Times reported that there had been a shift in thinking in Singapore about the importance of a thriving stock market to its standing as a global hub for business and finance. The FT report quoted sources as saying that there was now a willingness to consider maverick policies, and that even the idea of investing what it calls Singapore's pension money in the local stock market was on the table. Some market watchers have pointed out to me that this shift in thinking came about as big initiatives were being hatched by countries such as Japan and the United Kingdom to revive their own stock markets. So the MAS review group that has been formed isn't just another incremental move to support the local market. Instead, it seems to represent an acknowledgement that the world is changing and that if Singapore is to have a vibrant stock market, then some fundamental issues need to be addressed. The way I see it, investors should not underestimate the seriousness with which the MAS review group is tackling the task at hand. Second Minister for Finance Chee Hong Tat, who is chairing the MAS review group, said in a speech recently that revitalizing the market is not going to be easy, but the review group is prepared to try new ideas and take some calculated risks. Chee said during his speech that the MAS review group is exploring 3 areas to better position the local market for growth, namely encouraging a pipeline of quality listings, enhancing investor participation and broadening market liquidity, and re-evaluating Singapore's regulatory structures and approach. These are exactly the areas that the review group ought to be exploring, in my view. In fact, they roughly mirror the 3 broad categories of problems weighing on the local market that I highlighted in episode 37 of this podcast series late last year. Some of the ideas and possible initiatives Chee mentioned in his speech were not exactly new, though. For example, he noted in his speech that Singapore has managed to establish itself as the largest REIT market in the Asia ex-Japan region and attributed this to a supportive regulatory framework and ecosystem. And he suggested that Singapore seeks similar opportunities to grow its equities market by focusing on certain kinds of companies and not trying to compete head-on with the largest exchanges in the world. Singapore could, for instance, try to position itself as a trusted listing venue for mid-sized regional companies, as such companies would probably enjoy better investor familiarity in Singapore than in a larger global market. To make this happen, Chi said the MAS Review Group is studying ways to spur the secondary private fund sector to better support and nurture late-stage startups that are on the brink of considering an IPO. The review group will also explore ways to enhance research coverage of companies in targeted sectors before and after they go public. But Chi also said the review group will study ideas to widen investor participation and improve market liquidity gathered from industry players. These include incentivizing market makers to facilitate price discovery, broadening stock indices, and expanding the pool of equity market derivatives. Chi mentioned the review group is also looking into ways to reduce the regulatory burden on listed companies. For instance, it's exploring the possibility of streamlining the prospectus disclosure requirements while sharpening the focus on material disclosures and disclosure quality. Will these ideas be sufficient to revitalize the Singapore market? What more needs to be done? I'm going to talk about that next.
If you've been a fan of the podcast Mark to Market, Wealth BT and Property BT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, benpaul, and Darren Wong. Because great reads should be heard. The BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to Market, a podcast of BT Correspondence.
The biggest challenge in revitalizing the local market is that it's a multifaceted issue, and different stakeholders have very different views on what needs to be done. My own view, which I've previously expressed in the Mark to Market column and this podcast series, is that a prolonged period of underperformance has resulted in a misalignment of interests across the public market ecosystem. Unable to garner decent market valuations, companies have become less inclined to fully meet the obligations of their public listed status, in my view. Instead of working to increase the value of their companies, controlling shareholders now often try to squeeze minority investors out with lowball offers. And when these offers succeed, investors are left doubting the effectiveness of the boards and the regulators they rely on for protection. The result is that everyone blames everyone else for the chronically weak stock valuations in the local market and the lack of exciting new listings. MAS has said, quite rightly, that the review group will study ways to galvanize private sector participation in the effort to strengthen the local market, including from capital market intermediaries, investors, and listed companies. Its success, in my view, will hinge on its ability to effectively bring together all of these key stakeholders and find a way to realign their interests. At the same time, the MAS Review Group has to ensure that it addresses all of the really big issues, because these issues are ultimately interlinked, without getting sidetracked by every pet peeve highlighted by the various industry stakeholders. So, what are the really big issues that the MAS Review Group should focus on? As I said earlier in this podcast, the three areas highlighted by Chi, namely encouraging a pipeline of quality listings, broadening market liquidity, and reducing the regulatory burden on companies, are exactly the right things to focus on. But I was rather disappointed that Chi did not say more about channeling Singapore's domestic savings into the local market as part of the effort to broaden market liquidity. SGX chairman Koh Boon Hui addressed this issue quite well in the exchange's latest annual report, which I would recommend everyone read in full. In one portion of his letter to shareholders of SGX, he said, "The success of the stock market is dependent on multiple factors, some of which are outside the control of SGX Group. Our purpose is to serve as a trusted and efficient marketplace. We've worked hard to put in place an accessible venue that facilitates the exchange of capital and ideas, but the venue itself cannot create supply or demand. Other factors are necessary to bring about the vibrancy that's needed." Koh went on to note that previous efforts to revitalize the local market focused on the supply side, and he pointed out that equal emphasis to the demand side is necessary in order to really turn things around. Here's what he said in another portion of his letter to shareholders of SGX. A highly liquid market drives valuations, paving the way for IPOs. These things are all interlinked, but to achieve this, we require greater diversity in the demand side of the equation. We need to foster an institutional asset management ecosystem that includes the local stock market. Without domestic institutional demand, we cannot expect to see foreign institutional demand. Only when we support our own stock market can we attract foreign companies to list here. After all, if we do not support our own market, why should we expect others to do so? I couldn't agree more with the chairman of SGX. The MAS review group should address the supply side and the demand side of the marketplace simultaneously. There would be little point creating a pipeline of exciting IPOs if there isn't a ready pool of knowledgeable and enthusiastic investors to support those IPOs. On top of that, I think it's also important that the MAS review group explores measures to motivate companies that are already listed to maximize the market value of their shares. Singapore's thriving REIT market, which Second Minister for Finance Chi mentioned in his speech, is anchored by big homegrown sponsor groups such as CapitaLand Investment and Mapletree Investments. These sponsor groups have a strong incentive to ensure their REITs garner healthy market valuations, as this enables those REITs to raise capital and acquire properties from their sponsors. Controlling shareholders of many Singapore-listed companies do not apparently have a similar incentive to keep their market valuations up. Many companies that come to market do little to develop an investor following, and their shares often quickly sink below their IPO prices. In recent years, many companies with depressed share prices have ended up being taken private by their controlling shareholders. The way I see it, the Singapore market will not easily draw promising mid-sized listing candidates from around the region, especially if they are backed by private equity investors looking to maximize their return through an exit IPO. This will be all the more difficult in the absence of a broad base of locally listed mid-sized companies trading at healthy valuations. What exactly can be done here? The Mark-to-Market column has suggested, more than once, that SGX take a leaf from the Tokyo Stock Exchange by requiring companies trading at low valuations to explain how they plan to turn things around. Now, I understand why this idea might not sit well with everyone. There is no guarantee that companies in Singapore will react in the same way as companies in Japan. Many people may also feel that companies ought to make these sorts of decisions without interference from regulators, and that it really ought to be shareholders that push companies to take steps to unlock value. But the way I see it, requiring companies to disclose plans to improve the market value of their shares would help set a certain base level of expectations in the local market. It would make it clear to boards that the market price of their shares is something they must address. Investors will not get excited if companies do not give them a reason to get excited. Combined with the MAS review group's attention to other key issues, this could go a long way to revitalizing the Singapore market. That's it for this edition of Mark to Market. BT Correspondents will be back next week with wealth editor Genevieve Kwa. So please keep listening. In case you haven't heard, Mark to Market is now part of the BT Correspondents channel. That's where we'll be posting our new episodes from now on. Go follow BT Correspondents so you don't miss out. If you have any thoughts or questions about the show, email us at btpodcasts@sph.com.sg. I'm Ben Paul. As always, thank you for listening, and join us again next week.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.